Hey everyone, ready for a deep dive? We're tackling the Indian stock market today.
Yeah, and we're using this awesome interview we found with Ramesh Damani.
He's a big name over there.
Huge, a legend. And the way he explains things just makes it so clear. Like, he tells these stories and uses these analogies.
Yeah, makes it easy to get right. Not like reading a textbook.
Exactly. She's like sharing his actual thought process.
Yeah, and one thing he kept bringing up was compounding, like over and over.
Oh, for sure. Like, he gave this crazy example. If you get a 16.5% return
Uh-huh.
every year for 30 years,
Your money multiplies like 100 times over.
100 times.
Yeah.
Seriously.
Yeah.
So starting early, even if it's a little bit, it makes such a difference.
Yeah, time is on your side, right? But obviously, got to find the right stuff to invest in.
And that's where Damani gets interesting. He looks for these companies that are, like, unloved.
Unloved, what's that mean?
He calls them unloved, underknown, and underappreciated. Not the hot trends, but hidden gems.
So, stuff people are overlooking.
Yeah. Like, in the early 2000s, the whole Indian liquor industry was only worth, like, 200 crore rupees.
Seriously?
He said you could basically buy 10% of the market for the price of a nice apartment in South Bombay.
Wow. So he was like seeing ahead,
Totally. He also talks about defense companies, how they were just being thrown away by the market.
despite being super important.
Exactly. And then there's CMC. They're the ones who built India's whole railway ticketing system.
Huge, right?
Massive. But they were valued at, like, nothing. It's crazy.
So it's all about digging deeper, looking past the hype.
Absolutely. But here's the thing. Even Damani, with all his success, says he still gets self-doubt.
Really? That's kind of reassuring, honestly.
Right. He's like, even when you think you've found this amazing opportunity.
You start second-guessing yourself.
Totally. Like, am I the only one seeing this? Am I crazy?
Makes sense, though. Putting your money where your mouth is, it's scary.
It is. He's got this great line, though. He says, you have to put money on the table when you're convinced, even if no one else is.
So, gotta trust your gut.
Exactly. It's that conviction that makes the difference.
It's a risk, but sometimes the best stuff is off the beaten path. Now, switching gears a bit, Damani seems really excited about digital India.
Yeah. He sees this whole digital revolution happening as, like, a total game changer.
Especially in areas like, what, software and stuff?
Software, applications, data centers, all that. The whole ecosystem around it.
It's massive, right? It goes beyond just investing.
Oh, for sure. Like, this is transforming India.
Yeah.
And he's saying you can be part of it.
Like as an investor, an entrepreneur,
Or even just working in those fields. He wants people to think about how they can contribute.
it's exciting, that's for sure. Now, on the other hand, we've got all this fast-paced digital stuff.
But Tamani also talks about evergreen businesses,
Evergreen.
like companies that cater to basic human needs.
Things that'll always be around, no matter what the tech does.
Right. He gives examples like housing. People always need a place to live.
Makes sense.
Pharmaceuticals. People get sick. They need medicine. And then he calls them sin businesses with a laugh.
Sin businesses, what are those?
Things like alcohol, tobacco. Controversial, but
But they meet a demand that's not going away.
exactly. They tap into these enduring human desires. So from an investor's perspective, they can be pretty resilient.
Interesting way to think about it. So, spotting those unchanging needs.
Figuring out how they translate into investments, that's the key.
Long-term thinking, for sure. Now, Damani really emphasizes how much he learned from mentors.
Yeah. He tells these stories about learning from guys like Chandrakant Sampat, Ramdeo Agrawal.
Big names, right?
Legends. He soaked up all their wisdom, their insights.
It makes you think, who are the Ramesh Damanis in your field?
Right. Who could you be learning from? What are you missing out on?
It's all about those connections, finding the right people to guide you.
Definitely. He's like passing the torch, sharing what he's learned.
And it's up to us to grab it and run with it.
Exactly. What will you do with this knowledge?
It's a challenge, but an exciting one. So that's a wrap on this deep dive into Ramesh Damani's world.
Hopefully you've got a notebook full of ideas and a head full of inspiration.
But don't go anywhere yet. We'll be back in just a moment to share some final thoughts and a question to leave you pondering.
Yeah, stick around. But it's not just public markets, right? Like, what about private stuff? Or if you want to start a business?
He talks about that too. He seems to think entrepreneurs are like the first ones to catch those new trends, especially in India where things are changing so fast.
Yeah, he said something like, entrepreneurs, they see the opportunity, they jump on it. Like with quick commerce and all that delivery stuff.
Yeah, they got the venture capital, they built it, But he also gets that it's not for everybody.
Right. Not everyone's cut out for that 18-hour-day hustle.
So for those of us who are into the stock market, he says you got to develop that investor's mindset.
Spot the chances, make the bets, that kind of thing.
And you actually asked him, do good investors make good entrepreneurs? And vice versa. Like, do those skills overlap?
Yeah, I was curious about that.
What'd he say?
He thinks there's a link, like a back and forth. If you've run a business, you get how equity works, the value of things.
You've been in the trenches, you know how tough it is.
Yeah, approvals, licenses, all that. So he thinks that experience helps you as an investor.
Makes sense. You've seen it from both sides.
Now, remember that painting in his office? The one of Mao Zedong?
Yeah, I was going to ask about that. Caught me off guard a little.
He just laughed and said, I was in China, liked the painting, bought it. Said people think he's a Mao fan, but he's not.
But he did bring up some interesting history there about Mao and Deng Xiaoping and the whole succession thing.
Yeah, how Deng ended up reforming China. But yeah, Damani just said he liked the painting, got it cheap.
Like an undervalued stock, right?
Exactly. He sees the value where others don't.
Hmm,
And he said most people who visit his office don't even recognize who it is.
really? You'd think Mao would be pretty recognizable.
He thought it was funny. Like, here's this iconic figure, and nobody knows. But that's Damani, right? Drawn to the overlooked stuff.
The contrarian. Now, he talks a lot about mentors, how important they were for him.
Yeah, like how lucky he was to learn from those big names. Chandrakant Sampat, Ramdeo Agrawal.
Shaped his whole philosophy, he said.
But it made me wonder, how do you find those mentors? Especially when you're starting out, how do you even get their attention?
It's intimidating, right?
He gave some advice. He said you got to offer them something, not just take. Don't just be a taker.
Add value to the relationship.
Yeah. He said when he was younger, he knew a lot about the international scene, stuff his mentors in India weren't as familiar with. So he'd share those insights, talk about Buffett, Munger, all those guys.
So even if you're less experienced, you can still bring something to the table.
Right. And he said a lot of successful people actually want to give back. They've been lucky. They want to help others.
Pay it forward.
But he also said, don't waste their time. Be respectful. Be appreciative. Don't be that annoying person who's always asking for stuff.
Be mindful of their time and their space.
Exactly. Value investing is all about bouncing ideas off each other, seeing what works, what doesn't.
So you can actually learn from people who are younger than you, too, he said. Fresh perspectives.
Yeah, new ways of looking at things.
Yeah.
Now, you asked him specifically about Chandrakant Sampat, what it was like learning from him.
I had to ask, right? What was their dynamic like?
He said Sampat was the world's best listener. Like the smartest guy in the room, but he speaks the least.
He just absorbs it all.
Takes it in, forms his own opinion, and he listens to everyone, Damani said, from the chaiwala to the top fund manager. Doesn't matter.
So it's not about who's saying it. It's about the idea itself.
Yeah. He said Sampat evaluates ideas on their own merit, like Rahul Dravid playing Test cricket.
Each ball, different approach.
Exactly. Defensive, aggressive, whatever. Sampat looks at each idea fresh, sees if it makes sense.
Powerful. No biases, no ego, just the idea itself.
And then you asked him, what's the best gift you've ever received?
I was curious, what would someone like him say?
He didn't even hesitate. My grandchildren, he said. Just spending time with them, seeing them grow up.
Aw, that's sweet.
He said he feels bad for Rakesh Chunjanwala, who couldn't really experience that because he was so focused on the markets.
A reminder to appreciate what you have, right? The non-monetary stuff.
It's easy to get caught up in the chase, forget what's truly important.
Now, he gave a lot of advice for young investors, compounding, understanding businesses, all that. But what about those who want those crazy returns, like Rakesh Chunjanwala? Is that even possible?
You asked him about Chunjanwala's track record, compounding at like 40% a year.
It's insane, right?
Damani was pretty blunt. He said, it can't be done. Like, that's a record that'll probably never be broken.
He compared it to Don Bradman's batting average, Warren Buffett's returns.
Legendary stuff.
Yeah.
He said Chunjanwala was underappreciated because he was in India, not Wall Street.
But still, 40% a year. Unrealistic for most people.
He said if you can compound at 17, 18%, you're doing amazing. Aim for consistency, he said.
Long term, that's what builds wealth.
But then he talked about what made Chunjanwala so successful. He was a risk taker, totally dedicated to the markets, 24/7, no vacations, no distractions.
He paid a price for it, though, right?
Damani said he paid a price with his health. He couldn't really enjoy the wealth he built, didn't get to see his kids grow up.
Success comes with trade-offs, for sure.
It's a balancing act. Now, at the end, He gave some advice for anyone who wants to buy him a gift. He's a big reader, but he's probably got every book under the sun.
So what does he want?
He said the most important tool for any investor is understanding a company's market cap.
Simple, but crucial.
Number of shares times the price. It tells you so much about the company.
And he doesn't even use screeners, he said. If something catches his eye, he digs into the market cap.
He also talked about his favorite newspapers, the Wall Street Journal and the Financial Times.
Global perspective, right?
He said every business student should be reading those.
He's been reading the journal for like 40 years.
Back when he had to scramble to get one of the only copies in Bombay.
Dedicated, that's for sure.
And then you asked him what he fears most in life at this stage. Pretty heavy question.
What do you say?
He was honest. He said ill health. He's getting older. He's had some health scares.
It puts things in perspective, right?
All the money in the world doesn't matter if you don't have your health.
It's a good reminder for all of us. And with that, the interview wraps up. What a conversation.
So much good stuff in there. I don't know about you, but I'm still processing it all.
Me too. Compounding, unloved companies, mentors, market cycles. It's a lot to take in.
And don't forget those reflections on life and what really matters.
We'll be back in just a moment with some final thoughts and a question to leave you pondering.
Stick around.
So we've spent a lot of time with Ramesh Damani. What are your takeaways?
You know, for me, it's that idea of the unloved companies.
Yeah, he kept coming back to that.
It's such a simple idea, but it's so powerful. Like, don't just follow the crowd.
Look where others aren't looking.
Exactly. And he's got the track record to prove it works.
Hmm.
He made a fortune finding those hidden gems.
And it's not just about finding them, it's about having the guts to actually invest in them.
Yeah, when everyone else is running away.
He talked about building that concentrated portfolio too, like really focusing on your best ideas.
And not being afraid to be wrong sometimes. He said you can be wrong a lot as long as you're right on the big ones.
Wrong, 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 right, I think he said.
Exactly. And those big wins, they often come when everyone else is panicking.
When there's blood in the streets, as they say.
Right. That's when you got to be greedy.
But it takes discipline, doesn't it, to go against the grain like that?
It does. And that's where mentors come in. He talks so much about learning from others.
Finding those people who can guide you, challenge you.
Yeah, he was lucky to have those connections, those legends, like Zampat and Agrawal.
But he also said you've got to bring something to the table, you know?
Add value to the relationship. Don't just be a taker.
Right. Find ways to contribute.
And be respectful of their time. Don't be that annoying person who's always asking for stuff.
It's a two-way street. Mentorship.
It is. Now, something I found interesting and a little bit funny was that painting of Mao in his office.
Me too. I had to ask about that.
He just shrugged it off, said he liked the painting, got it cheap.
Like an undervalued stock, right?
Exactly. He sees the value where others don't. And most people don't even recognize Mao.
It goes to show perceptions are everything.
And he's not afraid to be different. Now, one thing that really hit home for me was when he talked about his grandkids.
The best gift he's ever received.
It was so genuine, you know, all that wealth, all that success. And what matters most to him is family.
It's a good reminder for all of us. Don't lose sight of what's truly important.
Now, he talked a lot about specific strategies, India's potential, all that. But what do you think is the biggest takeaway for our listeners?
I think it's that mindset, you know, that investor's mindset.
Yeah, being curious, being skeptical, being willing to think differently.
And never stop learning. He's been at this for decades, and he's still reading, still absorbing information.
He said the Wall Street Journal and the Financial Times, those are must-reads.
Global perspective. You got to see the bigger picture.
And don't be afraid to challenge conventional wisdom. He did it his whole career, and it paid off big time.
So as we wrap up this deep dive, I want to leave everyone with a question.
What's that?
What's your investment story going to be? What are you going to do with this knowledge?
Are you going to find that next unloved company? Or are you going to ride the next wave of innovation?
The future's not set in stone. It's up to us to create it.
So get out there, explore, learn, and make it happen.
And maybe someday we'll be featuring your story right here on the Deep Dive.
Thanks for listening.